The top headlines from the startup world. Byju launches $200 million rights issue ATA at a valuation of $225 million. Ravindran tells shareholders in a letter that the company is now less than a quarter away from achieving operational profitability.
India is home to more than 1.14 lakh startups and they have cumulatively created over 12 lakh jobs. The government says in its economic review also flags concerns on artificial intelligence, adding that it poses questions for growth in services, trade and employment.
BlueSmart receives fresh funding of $25 million from Switzerland headquartered Impact Fund Responsibility. The investment follows BlueSmart's $24 million equity round in December 2023.
Move and Sync, a startup specializing in workplace commute solutions, raises $15 million in Series C round from Bessemer Venture Partners. The company will use fresh funds for expanding presence in Philippines, South Africa and the Middle East.
Science-enabled sustainable agriculture startup Grow Indigo raises $8 million from Indigo AG, Myco and others to drive the future of sustainable agriculture.
Well, those were the headlines we've been tracking for you this evening. To the top story now. Byju's plans to raise $200 million through a rights issue at a valuation of $225 million. Now, remember, the edtech startup was once valued at $22 billion, but suffered numerous markdowns. However, with this fundraise, the edtech firm looks to address its working capital issues. My colleague Aishwarya Anand joins us with more. Aishwarya, quite a struggle for Byju's there.
Byju has launched a rights issue to raise $200 million from existing investors at a valuation of $225 million. This is significant for the company that raised $250 million at a valuation of a whopping $22 billion in 2022. The troubled company has suffered numerous valuation downgrades, most recently from BlackRock, which cut down its valuation to just $1 billion. In a letter to shareholders, CEO Byju Ravindran said, "This rights issue is about those who care the most about Byju's stepping up as we continue to turn the company around. It aims to offer all existing shareholders the chance to participate in this proposed capital raise to maintain shareholding without the need to ascribe valuations," he added. Peak 15 refused to comment on CNBC-TV18's query regarding participation in the rights issue. Ravindran also told shareholders that the company is now less than a quarter away from achieving operational profitability. Ravindran added that the founders of the EdTech group have invested $1.1 billion into the startup in the last 18 months and seek continued support from the investors. This comes just a week after Byju's posted its FY22 financials. The company's losses had ballooned 1.8 times from 4,564 crore rupees in FY21 to 8,245 crore rupees in FY22. The firm had attributed its losses to the performance of its two acquisitions, White Hat Junior and Osmo. Back to you.
Right, Aishwarya, many thanks for those details. Now, the Finance Ministry today presented its report card of the economy, and the report spoke about the reach of the Indian startup ecosystem. Akhil Vishwanath joins in now with the lowdown on what the report had to say on the Indian startup landscape. Akhil, tell us more.
Startups are a truly countrywide phenomenon, and that's one of the key takeaways from the economic review presented by the Finance Ministry. Out of 797 districts in India, 763 or 95% of the districts are home to at least one DPIIT registered startup. In total, the country is home to more than 1,14,000 startups, and they have cumulatively created over 12 lakh jobs. The review says regulatory reforms have been one of the key drivers. 3,600 compliances have been decriminalized, which has enabled the ease of doing business. The review also put the spotlight on the rise of women entrepreneurs. Under the Stand Up India initiative, 2.1 lakh loans have been sanctioned, of which 84% have been sanctioned to women entrepreneurs as of November 2023. Now, sectorally speaking, the report said India's e-commerce market is expected to reach $163 billion by 2026, with online sales accounting for over 25%. And speaking of e-commerce, the Open Network for Digital Commerce, or ONDC, found a place in the heart of the paragraph on startups, as the most recent addition to the India stack gains momentum, having recorded more than 6.3 million transactions since launch 2 years ago in early 2022. And lastly, but most importantly, the economic review spoke about the coming of artificial intelligence with caution. The report said the technological revolution poses profound and troubling questions for employment, particularly those in the services sectors, as AI removes the cost advantage that countries exporting digital services currently enjoy. To mitigate this risk, the paper suggests that developing economies must invest in infrastructure and a digitally skilled labor force to fully harness AI's potential. Back to you.
Thank you, Akhil, for giving us a lowdown of the economic review. Appreciate you joining us. Moving on, India's fintech and digital lending industry is one of the fastest growing segments in the financial sector. With a projected market size of $720 billion by 2030, we gear up this year. As for the union budget, we're keen to see how it will give the fintech industry what it needs to keep innovating and expanding. And joining me now is Priyanka Gil, the founder of Falcon. Also with me is my colleague Arundhati. Priyanka, welcome to Startup Street. Last budget, the government allocated 1,500 crore rupees in incentives to fintechs and banks. So capital is welcome, but it is not a constraint for the BFSI space in India, as it is one of the most capitalized sectors in India. So beyond capital infusion, Priyanka, what is the big ask from the finance minister for this budget?
Thank you so much for having me on the show, Shruti, and for asking the fintech sector about our expectations. You're absolutely right. You know, there has been plenty of capital allocation already. What's very interesting for me, Shruti, is that the India stack with protocols like UPI, account aggregator, DigiLocker, as we all know, has already brought about inclusion in the payment ecosystem at an unprecedented rate, thereby also enhancing transparency, boosting government revenues. Now, what for me is a really big theme is that how do we take this base of millions of new digital payment users and integrate them into the formal financial sector? I am talking about access to innovative financial services like short-term credit, loans, fixed income, and insurance. And so the critical question really is that how do we transform these advancements into monetizable, innovative financial products for the end user? I think, Shruti, the answer here lies in empowering, the two key players driving the transformation at the last mile, which is banks and fintechs. I would love to see a few key themes in the budget coming up, not only in Feb, but also in July, which is, accelerating the shift for banks towards modern cloud-native technology, strengthening fintech bank partnerships, and also, most importantly for me, encouraging more female participation in fintech.
All right, encouraging more female participation in fintech also being one of your asks. Hi, Priyanka, Arundhati here. Now, reports also suggesting that fintech lending will surpass traditional bank lending by 2030. Now, for this to be possible, digital lending solutions must be rolled out beyond the metros, right? Reaching small businesses and consumers in Tier 3 cities and beyond. So what do you think needs to be done to ensure that this happens?
So I think, Arundhati, that's a great question. And, for me, what is really critical, like I said, whether it is digital lending or fixed income products or any other products, that we're talking about here, which are advanced, right? The key players here in terms of delivery of these financial services, distribution of these financial services are banks and fintechs. So when you talk about banks, right, we strongly believe that in order for banks to deliver the next generation of financial products, whether it is in metros or especially, of course, beyond metros in Tier 2, Tier 3 cities, we need the adoption of modern banking technology. I think it's critical. While the government has taken some welcome strides to increase access by providing its own cloud computing facility, I think this can be further optimized by providing benefits such as subsidized rates, incentives like tax rebates for using such facilities to financial institutions. So I think that is a very, very key point. Another point, Arundhati, for me is really strengthening fintech bank partnerships. I think fintechs have already proven that they can be very, very important distribution partners to banks. So for me, I think one of the most important themes is that despite the proliferation of fintech startups, unfortunately, Arundhati, what I've seen on the ground is that even after funding support from VCs to a lot of these startups, they're simply unable to get off the ground due to hesitancy of banks to onboard early stage startups, right, due to potential economic losses or regulatory scrutiny. So while the regulatory sandbox by RBI is a right first step in this direction, I think the government can also consider offering subsidies, rebates, or other compliance relaxations to help banks increase their risk-taking appetite and onboard more fintechs.
Absolutely, yeah. All right, just want to go back to something that you were just mentioning. A robust digital infrastructure is designed for seamless integration with existing systems, improving efficiency, convenience, and of course, security. And one of the big demands for the sector is a supportive innovation ecosystem to foster research, collaboration, and incubation of emerging technologies like AI, blockchain, and cloud computing that you were mentioning, and to address evolving customer needs. Your thought on all of these?
So yeah, so I think, like I mentioned, Shruti, to sort of encourage all of this, I think a couple of things are very important. Number one, that banks start actually investing, because ultimately, the last mile is all led by banks. Any of these technologies we are talking about, whether it's blockchain or AI, all of this ultimately is facilitated by banks who have the power to issue and process the instruments that we're talking about. So, if you look at the statistics, Indian banks currently only spend about 2 to 2.5% of their budget on IT, whereas this needs to go up to a global standard of about 7 to 8%. So, that's the kind of gap that we are talking about here. And I think, unless that gap is addressed, unless adoption of this modern tech that I'm talking about, banking tech, increases, a lot of the innovations that we discuss every day cannot be sort of, achieved at the last man.
Right.
So for me, that's a huge point.
All right, Priyanka, we're completely out of time. We had a few more questions for you, but no time on the show today. But thank you so much for joining us with what you expect from the budget this year.
Thank you so much. Lovely being here.
And staying with budget expectations, we now turn our focus on what investors are expecting from the upcoming budget. My colleague Ritu Singh caught up with Anand Lunia, the founding partner at India Quotient, and Sanket Parekh, the executive director at Pidilite Ventures, to find out. Take a look.
Since we're very close to the budget, I know there have been the long-standing asks of the VC ecosystem, of the startup ecosystem, whether it's taxation, whether it's some capital gains-related taxation measures and so on and so forth. What are your expectations this time around? Win more or lose more?
We want tax parity with public investments or for the private investment sector.
Yes.
Besides that, I'm hoping for more UPI moments. For example, in construction.
Yeah.
For example, in education. For example, in hospitality. Sometimes owned by the same people, right?
Yeah.
So I think we are not going to see any startups changing this space anytime soon.
Okay, Sanket, are you a little more optimistic than Anand, I hope?
Cautiously optimistic, I guess, but I echo his words on the taxation. I think any opportunity that can create better liquidity will generate better attention and attract more people. So if an out is not there, an in will be challenged, and that's the long-term perspective.
What would make the ease of doing business here better? If you were to give your 2 tips to the finance minister, if she may be listening, what would you say?
I think the access to the market in terms of regulations and listing, similar to, as Anand said, on parity with the public-private, in this case, parity with the global norms on registrations, so that for a foreign fund that may be looking at India, for them it becomes very natural if it's on parity. It's not a whole new. The beauty about India is that it's in English, so it's easier for foreign funds to understand and explore. But if the requirements are made on parity, it becomes that much easier and quicker. So speed is of the essence in this case, and anything that can help improve the speed to market, whether it's entry into market or even exit, can be beneficial.
What are the big themes you'll watch out for in this budget?
For the next decade, I'd say, Ritu, hopefully starting with this budget, bulk of what we spend as a middle class, right, is on education and on shelter, right, a home. And both of these sectors, we haven't really seen anything. And we need these sectors to open up. We need to attract a lot of capital. We need to democratize these spaces. It's sort of a black box, right? And that's where I like to see action happening. They're very big sectors, and I think the government is doing a good job on power, on infra, road, etc.
And that Make in India push for the PLI.
Absolutely. But study in India also would be a good push, right? I think the number of students going abroad. At some point, by the way, we'll need Make in India for education, because we are buying so much of, importing so much of education, right? Looks, if you extrapolate the trend, we'll be spending a lot more on like Indians buying homes abroad, Indians buying education abroad might exceed our oil bill. You know, it's really that bad.
What would you want the government to focus on from here? What does the sector need? Because it's still at this nascent space, especially when you talk about green construction in India.
I think regulations on pushing for more adoption of green technology within the home development, home construction ecosystem. I think the West is extremely evolved on pushing for certain material usage. I think the industry needs a little bit more push in that direction.
Let me end by asking you both about the overall macroeconomic picture, the funding winter, which people like Anand seem to love. That's been sort of the theme for the last couple of years, restructuring, layoffs, hard time for startups. Is the overall picture starting to look clearer, better?
I think from a founder's perspective, they're recognizing that unit economics are now becoming more important than just how much money you're raising.
And investors too are placing more,
we love
importance.
it. As a corporate, for us, as a publicly traded company, unit economics are essential. We talk about profitability on an ongoing basis. So seeing founders also speak the same language is music to our ears.
Anand, final word from you. Are you worried the winter's ending?
We had a good run in the winter.
Yeah.
You know, the best time to build companies.
Yeah.
Everything comes cheap. I'm worried that a little bit of deluge of capital will happen at some point soon. Right? US
You
might.
don't think we've learned our lessons of the past?
We haven't. I think I've been through so many cycles. There was a cycle right after the Lehman crash, and there was a cycle after the dot-com crash. The cycles keep happening, and this deluge might be bigger than the last one.
Why would you say so?
Compared to the US is going to go into an easing at some point.
Yeah. Right? So all the money will flow back?
Money will flow back. It's already flowing in, and it'll flow back. And right now, India is practically the only place which sort of seems to be attractive for the whole world. I think we, as gatekeepers of capital, have to be on our toes, very careful this time. Entrepreneurs may have learned some lesson, but there's always a new crop of entrepreneurs, new crop of investors, and I'm sure we'll repeat some mistakes. Not all of them, but...
Well, hopefully not the seasoned players.
Yeah.
Well, on that note, it's time for us to head into a short break. But coming up, Priyanka Gil has been elevated to the Good Clam Group board. She's also part of Kalari Capital as a venture partner. We speak to Priyanka to find out what her new roles entail on the other side. Stay tuned. Welcome back to Startup Street. The Good Glam Group, one of the world's largest content creator commerce companies, elevates group co-founder Priyanka Gil to the board as well as the chairperson of Good Media Co. Now, Priyanka also joins Kalari Capital as a venture partner, and I caught up with Priyanka earlier and started by asking her about her responsibilities at Kalari and her new role at the Good Glam Group. Listen in.
I've always been interested in working with entrepreneurs, especially female entrepreneurs, to help them scale and grow. And Kalari just became the perfect place to do it because they were my first institutional investor, and I've known Vani Kola for over a decade, and there's an absolute comfort factor there. So yeah, it's an exciting opportunity, and I can't wait to see the wonderful things we will do together at Kalari Capital, where I'll be joining as a venture partner. I'd be advising on the DTC portfolio development. And of course, I would be heading the CXXO initiative, which focuses on companies that are led by female founders.
Sure.
So that's on the Kalari end. At Good Glam Group, of course, I continue to remain the group co-founder. Now I'd be advising more strategically. I'll also be joining the board. And I've been elevated to chairperson of the Good Media Co, where I'll continue to make sure that our media assets are performing really well and the content to commerce flywheel continues to kind of spin really fast and help the company scale and grow.
As you now head the CXXO initiative, tell us how you plan to scale more female founders in the startup ecosystem.
I think, I, of course, have a unique vantage point given my own experience over the past decade or so. And I've seen kind of the good, the bad, the highs and the lows. And there are women founders do face interesting challenges at times. And I think this vantage point gives me a way to look at things and to help them out there. So it's just literally getting more and more women to into the kind of the top of the funnel, helping them start up companies. And then, of course, finding those gems out there that need the support and the capital and the mentorship and providing all of that to them.
Tell us what sectors interest you. Of course, we know one is D2C, but will you be looking at other sectors? What piques your interest, and what will you look for in founders?
See, honestly, my kind of say sweet spot and safe spot for me is D2C. That's something that I know best. So I naturally gravitate towards founders who are building in that space. I think especially when you're looking at early stage investments, and Kalari is an early stage investor, I think you're looking more at the founder profile, the founder personality, and whether they really have the tenacity and the resilience to kind of take their venture up to the next level. So finding that fit is extremely important because, as you know, that companies go through so many kind of changes, business plans change, pivots happen. It's actually the tenacity and the resilience of the founder that helps them kind of stay in the game, and how much are they willing to learn and grow in their journey. So those are some of the things that I've always found most fascinating about the best founders I've met. And I guess that's what I'm going to continue to look out for.
Have you already started your conversations with the female founders there? What kind of conversations are you happening?
So, because I've had this long association with Kalari and with CXXO as well, where I was a founding board member. So a lot of the portfolio companies, and especially the female founders, are already, a lot of them are friends of mine and I'm familiar with them. So I've anyway been speaking to them over the years and advising them. And now, of course, I'll do that in a much more in a formal way. And I think we have some really exciting companies out there. We have Radhika Gai with Kind Life, what she's building. Super excited about that. We have Nia Bagaria with Her Key. I think she's doing something really fantastic. So yeah, looking forward to working with them and seeing where their journey takes them now.
All right. Priyanka, like we also discussed, you're elevated to the chairperson of Good Media Co. Talk to us about the growth plans there. Also, any strategic investments the Good Glam Group plans to make anytime soon this year?
So over the last year, we created over 600,000 pieces of content across different formats that received over 3 billion impressions, right? So I think my job is to make sure that the Good Media Co. engine continues to kind of work, our media platforms continue to grow, scale, their brands kind of stay robust, and they stay true to their brands. And of course, then we see kind of the downstream contributions that has in the whole kind of the Good Glam Group ecosystem, especially for our good brands.
So tell us, what are the big learnings from your journey so far as a founder and now as an investor? And as you transition to your new role, what kind of preparations have you done?
It's a long marathon that we are in as entrepreneurs, and we really have to build ourselves up to kind of be in there. The preparation needs to kind of be for that. So that's one. I think the second thing is that you have to kind of be ready to change and pivot as and when kind of the opportunity arises, right? That nimbleness is extremely important. And that's kind of one of the big learnings that I've had out there. Third for me is the relationships that you build actually trump pretty much everything else, because it's those relationships that help you out in the good times, but they become even more important when the going gets tough. So kind of hold on to your relationships, nurture them, and make sure that you're investing enough time and energy into them.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.